Good morning, everyone. Thank you for joining us today. My name is Zachary Pierce. I am the Communications Coordinator for the State Retirement Board. On the line, we have Paula Dodona. She's the Assistant Director for Communications and Outreach. She'll be assisting me today. We're also going to be joined a little later by a representative from the SMART Plan and also a representative from Social Security. But I welcome everyone to this benefits overview. Here's our program overview for today. We're going to go through an introduction, talk about eligibility and plan rules, go over the application process itself, and then finish things off on post-retirement matters. As a general update, the State Retirement Board continues as is in terms of our board operations. The offices are closed to the public. Our telephone hours are 8 a.m. to 5 p.m., Monday through Friday. We will communicate any future changes via our website, social media channels, and newsletters. Now, members of the Massachusetts State Employees Retirement System, or MSERS, may drop off completed forms, applications, and other documents to our office in Boston, which is located at 1 Winter Street, Downtown Crossing, on the following days: Monday, Wednesday, and Fridays from 10 a.m. to 3 p.m. Members may also drop off completed forms, applications, and other documents to our Springfield office, located at 436 Dwight Street, room 109A, on the following days: Tuesdays and Thursdays from 10 a.m. to 2 p.m. Please read our MSRB visit protocols and requirements policy documents before visiting either office. You can also read any of our updates on our website and download those MSRB visit protocols and requirements policy documents on our website. Now, the State Retirement Board is a statutory authority. It is governed by Massachusetts General Law, Chapter 32. It is a 5-member board, and the chair is State Treasurer Deborah Goldberg. The Massachusetts State Employees Retirement System, or MSERS, is a defined benefit plan, and we calculate your benefit using the formula that you see on the screen here. Your service years, multiplied by your age factor, are used to determine a percentage of the 36 or 60 highest consecutive salary month average, depending on your hire date. I'm going to break down this formula throughout this presentation. Now, as of May of 2021, there are 158,370 members of the MSERS. This includes 90,488 active members and 67,882 retirees and beneficiaries. Now let's go over the eligibility and plan rules. Now, membership in the MSERS is mandatory until separated from the state by reason of retirement, failure of re-election or reappointment, resignation or removal, or discharge from the position or office held. The contributions that you make and how they are invested are managed by the Pension Reserves Investment Management Board, also known as PRIM. If you have any questions for how your contributions are being handled, you could reach out to PRIM via their website, www.mapension.com. Now, the contributions that you make are mandatory for all members in service, and they are pre-tax through payroll deductions. Depending on when you joined the system, the rate at which you contribute may vary. So for those of us hired July 1st, 1996 or later, we contribute 9%, and if your membership began on or after January 1st, 1979, an additional 2% is withheld from the portion of your salary that is over $30,000. State police who are hired July 1st, 1996 or later contribute 12%. Unlike in a voluntary contribution plan, you cannot access your funds while you are actively employed. If you leave the state, you'll have a couple options available to you. You could leave your money in the system, or you could take a lump sum withdrawal, which could be a direct refund with a 20% federal tax and possibly a 10% IRS penalty, depending on your age, or you could roll the money over, pre-tax to a financial institution or after tax to the member. If you do choose to leave your money in the system, it will accrue interest for 2 years. After those 2 years are up, you'll receive a letter from the board indicating that your account has been frozen. If you're involuntarily separated or have 10 or more years of creditable service, you'll receive your contributions back plus the regular interest rate of 0.01. If you voluntarily resign with less than 10 years, you will receive your contributions back plus 3% interest. Members hired before April 2nd, 2012 and who withdraw their contributions will be considered new members should they later return to state service. Members entering the system on or after April 2nd, 2012 will be affected by the pension reform provisions now in effect. We'll go over how pension reform made some changes to the retirement system. Now, earlier I mentioned that one of the factors that we use to calculate your pension benefit is your years of service. And another term for this is creditable service. If you are a full-time employee, you will earn 1 year of creditable service for each year completed. If you're employed on a less than full-time basis, you will earn a prorated amount of service. So, for example, 1 year at 50% part-time service would equal 6 months of creditable service. Now, in some instances, you may be eligible to add to your creditable service with a buyback of prior service. In order to do so, you must be an active member in service at the time of your application, and you must complete and submit to the board the appropriate service purchase applications along with any required documentation. All service purchases must be paid in full prior to you receiving a retirement benefit. Here are some common types of service purchases that our office sees. Creditable service purchase, which could be refunded prior service. So, for example, if you worked for the state for a number of years, left the state to go to work in the private sector, and then came back to work for the state, you could potentially buy back that service that you had previously worked if you had refunded it when you went to work for the private sector. Service to another Massachusetts public retirement system. So if you have any time that you've worked in a city, town, municipality, or out-of-state teaching service. For contract service, the maximum amount of contract service eligible to be purchased is 4 years, and the member must be vested. The contract service being purchased must immediately precede membership into the MSERS with no more than a 6-month or 180 days break in service. And the position/job description must have been substantially similar to the job description the member held upon re-entry into membership into the MSERS. Another type of service purchase that our office sees is veteran service. The maximum amount of military service eligible to be purchased is up to 4 years. You must qualify as a veteran as defined in Massachusetts General Law, Chapter 32, Section 1. Veterans who also have active reserve or Massachusetts National Guard service may be eligible to receive 1 year of creditable service for 5 years of reserve/guard service. If you have any service purchase or buyback questions, you can email the buyback team directly, buyback@tre.state.ma.us, or you can call them at 617-367-9333, extension 856. As of August 2021, the average monthly retirement allowance for members of the MSERS was approximately $3,335. Now today we're going to go over 4 different types of retirement. Superannuation, which is an antiquated term. It means regular retirement. Accidental disability, ordinary disability, and termination allowance, also known as Section 10(2). Now, termination allowance is only for eligible members who entered service prior to April 2nd, 2012. It was done away with during pension reform. Now, speaking on pension reform was something that was signed into law by Governor Deval Patrick back in 2011, and it went into effect in 2012. It changed a number of things with the retirement system, but for purposes of this slide, we'll focus on eligibility for retirement. If you were hired before April 2nd, 2012, you must be at least age 55 with a minimum of 10 years creditable service, or be any age with a minimum of 20 years of creditable service. And we use the average of a highest 36 consecutive months base salary when calculating your pension benefit. If you were hired on or after April 2nd, 2012, in Group 1, you must be at least age 60 with a minimum of 10 years creditable service, Group 2, age 55, and we use an average of a highest 60 consecutive months base salary when calculating your pension benefit. Now let's go over the benefit calculations and how exactly we come up with your pension benefit. So superannuation. I mentioned this term a couple of times now. Superannuation is an antiquated term, and it's used to describe the process of being retired upon reaching a certain age and meeting other requirements, including length of creditable service. At this time, group classification should be already approved before the calculation of one's pension benefit. Now, for a typical superannuation retirement, the calculations are based on your age as of your last birthday, your length of creditable service, your group classification, and your highest 36 or 60 consecutive months average of base compensation. Once again, that is depending on your hire date. Now, an allowance may not exceed 80% of a 3-year or 5-year average annual rate of regular compensation, once again, depending on your hire date. And there is a veteran's premium. It provides $15 per each year of state service up to 20 years, which is up to an additional $300 per year. Now, I mentioned that one of the factors that might come into play when we calculate your pension benefit is group classification. Your position, occupation, and the duties you perform determine your group classification. The group classification applicable to your specific position at the time of retirement may be reviewed by the State Retirement Board for determination pursuant to its group classification policy. Here are the 4 different types of group classifications. Group 1 are officials and general employees. So I would fall under general employee. I work in communications, primarily at a desk setting. I take phone calls and emails from members of the retirement system. I would be considered a Group 1. Another example of Group 1 would be professors at a university. Group 2 are members that include probation officers, court officers, certain correctional positions whose major duties require them to have the care, custody, instruction, or supervision of prisoners, and certain positions who provide direct care, custody, instruction, or supervision of persons with mental illness or developmental disabilities. Group 3 is limited to state police officers, and Group 4 are members that include certain public safety officers, officials, and employees, such as police officers, firefighters, and certain correction officers. With group classification, there is proration of service. So members hired before April 2nd, 2012 may elect to have their creditable service prorated, but it is not mandatory. You may request all of your time be rated the same as when you worked the last 12 months immediately preceding retirement, if you so choose. If you choose to have all of your time be rated, you would only have to submit one group classification. Members hired on or after April 2nd, 2012 must have their creditable service prorated based on their group classifications during their service. If approved at retirement, a benefit calculation is completed for the prorated periods of Group 2 or Group 4 service and may be combined with benefit calculations for periods of other service. You would need to submit a separate group classification application for each position you wish to be designated as Group 2, Group 4, or 2050, which is for corrections officers only. Now, Group 2 and Group 4 classifications are subject to board approval, and a member must submit a group classification application. Members must be in the eligible position for 12 months preceding retirement. Group 2 would add 5 years to your age at age 55. Group 4 would add 10 years to your age at age 45, or 50 for those hired on or after April 2nd, 2012. And you must be already eligible to retire in order to qualify for either Group 2 or Group 4. Now let's take a look at an example. So we have Patricia here. She is age 55 and a member of Group 1. She has 20 years of creditable service, and her salary average is $55,000. And for purposes of this example, we're going to say that she was hired prior to April 2nd, 2012. And she is seeking a regular superannuation retirement. Now, we'll take her 20 years of creditable service and we'll multiply that by the age factor at age 55. Now, in the handouts, I've included 2 retirement percentage charts, one for those hired on or after April 2nd, 2012, and one for those hired prior to April 2nd, 2012. On the second page of both of these charts is the age factor chart. So looking at the age factor chart, we see that the age factor for someone age 55 is 0.015. 20 multiplied by 0.015 would give us 30% of the $55,000 salary average, which would equal to $16,500 for Patricia's annual pension benefit. Now, Ava is also age 55. And like Patricia, Ava has 20 years of creditable service and her salary average is $55,000. However, Ava is a member of Group 2 and a veteran. So we're going to calculate her benefit a little differently. We'll take her 20 years of creditable service and we'll multiply that by the age factor of 60. Because she was approved for Group 2, we add 5 years to her age. 20 multiplied by 0.020 gives us 40% of the $55,000 salary average. We will then add the veteran's bonus, which will be $15 per the 20 years of creditable service, which gives us a total pension benefit of $22,300. Our office also processes some other types of retirement. Starting off, we have accidental disability retirement. This is employment related. So if you were to become injured or sick while working and were unable to continue work, you could potentially apply for an accidental disability retirement. The calculations are based on 72% of salary on the date of injury or the last 12 months working average plus annuity. Now, the reason it says or is because we will do either calculation, and whichever one is better for you is the one that you'll get. Accidental disability retirement is not federally taxable. Ordinary disability retirement is non-employment related. So if you were to become injured or sick outside of work and were unable to continue work, you could potentially apply for an ordinary disability retirement. You must have 10 years full-time creditable service to be eligible. For veterans, regardless of age, it's 50% of last year's salary average under option A. For non-veterans, we raise the age to 55 and calculate under a regular retirement using a 3-year average salary if you were hired before April 2nd, 2012. If you were hired on or after April 2nd, 2012, we raise your age to 60 and calculate based on a 5-year average salary. Ordinary disability retirement is federally taxable. For both accidental or ordinary disability, there is an approval process. You'll be asked to be examined by independent physicians, such as a joint panel or 3 individual examinations. It'll go to the board for approval, and then the Public Employee Retirement Administration Commission, also known as PERAC, reviews and has final approval over all disability applications, both accidental and ordinary. For those who may not be aware, PERAC's mission is to provide regulatory oversight and guidance for the effective, equitable, and ethical operation of the Commonwealth of Massachusetts's 104 public pension systems. Now, Termination Allowance, also known as Section 10(2) retirement, was done away with during pension reform, so it's only applicable to those hired prior to April 2nd, 2012. And it requires either 20 years or more full-time creditable service and involuntarily terminated at any age, or 30 years or more full-time creditable service, regardless of the nature of separation, but you must be under the age of 55. If you meet either of those criteria and you apply for a termination allowance and it's approved, you could receive 1/3 of a 3-year salary average plus annuity. Now, where a termination allowance might come into play is if you're working for an agency and they are laying off some positions and your position is one of those getting laid off, if you are eligible, you could apply for a termination allowance. Now, in a situation like this, if, let's say, your agency offers you an incentive payment, accepting that incentive payment would disqualify you for a Section 10(2) retirement. So if a situation like that were to occur for you, you might want to reach out to the retirement board so you can weigh the options available. All termination allowance decisions are reviewed and decided upon by the retirement board and PARAC. Now, before we move into the application process for retirement, we did want to talk about what happens if you don't make it to retirement. What happens if you pass away prior to retirement? There are a few things that could happen. When you started working for the state, you likely filled out a Commonwealth enrollment form. And on this form, you would have listed beneficiaries. And if you pass away prior to retirement, those beneficiaries could receive a lump sum of the money in your annuity account, which are the contributions you've been making as an active member. There is something called an Option D. A member who has at least 2 years of creditable service can complete an Option D form naming one beneficiary, either a spouse, unmarried former spouse, child, parent, or sibling, to receive a benefit for the rest of that individual's life if you pass away prior to retirement. An eligible spouse would have the first right option to accept the benefit or waive their right to it. So using myself as an example, let's say I'm married and I have a child, and I name my child as my Option D beneficiary, and I pass away prior to retirement. My spouse would have the first right option to accept that benefit, or they could waive their right to the benefit and pass it along to my beneficiary, in this case, my child. However, having the Option D on file might come into play if, let's say, my spouse and I were to both pass away. Maybe we're on vacation and something unfortunate were to befall us. Having that Option D on file guarantees a benefit for my beneficiary, in this case my child, for the rest of their life. Now, the Option D form must be witnessed by someone other than the Option D beneficiary designated on the completed form, and if upon the active member's death there is no surviving spouse or minor child and no Option D form, then either a lump sum refund of the account will be provided to the beneficiary on record, or a lump sum payment to the estate will be made if there are no beneficiaries on record. The Option D designation becomes void upon retirement. So when you retire, you're going to choose from retirement options, which are separate from the Option D. We'll go over those a little later. But the Option D is solely for active employees. So once you're retired, it is no longer applicable. So moving on now, we're going to talk about the application process itself. In regards to submitting documents to the Retirement Board, regular mail delivery to the Retirement Board's office in Boston continues, and the staff is processing documents received. We strongly encourage everyone to continue mailing documents to the office either in Boston or in Springfield. If your request is not time sensitive, we ask that you defer submitting it to a later date. Now, for those of us who might have joined late, there is some drop-off hours for both our Boston and our Springfield office. So if you download a copy of this presentation, you can review what those specific drop-off hours are. You are not required to also email a document that you have mailed. Emailing documents may result in unnecessary duplication, and it may slow down the processing of a transaction. Be sure to make yourself a copy of any documents you mail. For most documents, we will honor the postmark date as the date of receipt. If you do email documents to the Retirement Board, please remember a couple of things. Do not include your entire Social Security number, dates of birth, bank account numbers in any email correspondence or on any forms. Please just include the last 4 digits of your Social Security number or your MSRB ID if you know it. Please use the dedicated email address for your specific transaction or request. I'll have a list of them at the end of this presentation. And please put your name and MSRB ID or employee ID in the subject line. Please also remember to submit multi-page documents as one document, not as separate pages, and attach the document when you send your email. Now, you can file your retirement application 120 days before or 60 days after your last day on payroll. You could file more than 60 days after your last day, but the effective retirement date will be 15 days after filing. You can also withdraw your application any time up until the day of retirement. However, no changes can be made after your retirement date has passed. Some of the required forms are the application itself, the option form with witness signature. If you are married, your spouse must witness the option form. If you're not married, you still need to have a witness sign the option form. The W-4P tax form, the direct deposit form, authorization for filing information electronically, and copies of any required documents requested, such as birth certificate, marriage certificate, DD-2114 if you're a veteran. It varies for everyone filling out the application. All of these forms are available in our Superannuation Retirement packet, which is available on our website. So if you go to our All Forms page, you'll see a download for this application, which will include all of these forms that are required. Now, one of those forms you're going to fill out is the Retirement Option Selection form, and there are 3 options to choose from. Option A is no survivor benefits. It is the maximum benefit. It factors the last birthday. All benefits will cease upon death. The final check at the time of death will be payable to the estate depending on the time of month. Option B protects your annuity, which is your contributions you made as an active member. It is a 1 to 5% reduction in your benefit. The reason for this reduction is because when you start receiving your benefit, the money comes from 2 places. A portion of it comes from the state pension fund, and a portion of it comes from your annuity account, which again is the contributions you've made as an active member. And as you're retired, the money in your annuity account will deplete, and eventually it will zero out. However, when you have $0 in your annuity account, you'll still receive your pension benefit because we begin supplementing money from the state pension fund for your checks. So you'll still receive your check even when you have no money in your annuity account. What an option B does is it's a 1 to 5% reduction in your benefit because we are taking less money out of your annuity account. The idea being is when you pass away, there will be some money left over in your annuity account that can go to your beneficiary or beneficiaries as a lump sum. Now, you may choose more than one person as your option B beneficiary. That beneficiary does not need to be related to you, and you may change your option B beneficiary at any time. Option C is the only joint survivor allowance. This is the only option that guarantees a benefit for a beneficiary for the rest of their life when you pass away. It is a 7 to 15% reduction in the benefit. It could be less than 7, it could be more than 15. The reason for that reduction is because when we calculate your benefit, we also calculate the benefit of your beneficiary. So if it's a child whose age is much younger than you, it could be a higher reduction in the benefit. It could be more than 15. If it's someone closer in age to you, maybe like a spouse, it might be a smaller reduction in the benefit. If your option C predeceases you, you will automatically pop up to option A. You cannot change the option C beneficiary that you elect for any reason. So the only caveat is if your option C predeceases you, you will pop up to option A. It's an automatic process, but you cannot rename your option C. The eligible beneficiaries under option C include spouse, parent, unmarried former spouse, sibling, or child, and you can only choose one beneficiary. Now let's get into some post-retirement matters. So there is a cost of living adjustment. Retirees will be eligible for a cost of living adjustment, also known as the COLA, on July 1st of the second fiscal year following the year in which their retirement benefit first took effect and each year thereafter if a COLA is approved annually by the legislature. The COLA is solely a legislative item. Historically, it's a line item in the governor's budget and a line item in the legislature's budget, and they hash out their differences. And when the final budget is signed, if the COLA is included, it would go into effect. Historically, it's also been up to a 3% increase of the first $13,000 of the pension, which is currently $32.50 per month, or $390 annually. Now, there are no state taxes on your MSERS pension in Massachusetts, but it is federally taxable. There are also 15 states that will not tax your pension. The states we have listed here on the left and highlighted on this map. Now, if you move to a state not listed here, like Maine or California, then you would need to reach out to that state's Department of Revenue, the IRS, or a tax professional to determine what your tax liability would be living in that state. If you move out of the country, very similar, you would need to reach out to that country's tax service provider or a tax professional to determine your liability living there. The State Retirement Board is not a tax authority, so we are not authorized to offer you any tax advice. Now, it's very important that you let your survivors know what to do upon your passing. They need to contact the State Retirement Board immediately to stop the direct deposit of the pension benefit. They need to provide a copy of the death certificate. The retirement option you chose, A, B, or C, will be carried out, and they need to contact the Group Insurance Commission separately for any applicable benefits such as health and life insurance. It's very important you let your survivors know to do this. We had a case once where we had an adult child who shared a bank account with a member, and that member passed away, and the adult child did not report the passing of the member and continued to draw money from the bank account that was receiving the benefit. The retirement board found out about the passing of the member, and that adult child now owes the board up to $200,000. So to avoid situations like that, it's just important you let your survivors know they have to take the appropriate course of action when you pass away. Now, if you're looking to work in retirement, effective July 1st of 2021, you're limited to 1,200 hours per calendar year, and or your total earnings per calendar year cannot exceed the difference between your retirement allowance and the current salary of the position from which you retired. After you've been retired one full calendar year, you may earn an additional $15,000 per year beyond the limitations listed above. Now, if either of the previous two conditions are met, you must cease employment, or if you wish to continue working, then you must request to waive your retirement allowance under Section 91. In certain circumstances, a retired member may request to be reinstated to active service under Section 105, though certain conditions must be met by the member, including the payment of retirement benefits received, and you must work for 5 years after reinstatement before reapplying to retire. And to just provide an update and some context to that 1,200 hours, the Massachusetts Senate on September 30th, 2021, joined the House of Representatives by unanimously overriding Governor Baker's previous veto of the proposed legislative increase in post-retirement work hours. As a result, the new annual limits for superannuation retirees is 1,200 hours and was made retroactive to July 1st of 2021. The legislation did not impact the dollar limits or disability retiree reporting requirements. From January 1st to June 15th, 2021, retirees working in the public sector were exempt from earnings restrictions due to legislation. Retirees are responsible for tracking their hours and or earning limits. Current guidelines for working and receiving a superannuation retirement are available on the PARAC website, which we've included a link to at the bottom of this slide. If you're looking to work in the private sector, there is unlimited earnings for a standard superannuation retirement. Restrictions do apply to other types of retirement, such as disability. There are some instances where your retirement allowance or accumulated deductions may be forfeited. If you have misappropriated governmental funds or property, if you have violated certain provisions of the Massachusetts Conflict of Interest Law, or if you have violated laws applicable to your office or position. For health insurance, health, dental, and life insurance for public employees is administered by the Group Insurance Commission, or GIC, which is a separate state agency. Employees must notify GIC of their retirement by completing and submitting a GIC employment status change form to their office. You can contact GIC by calling them at 617-727-2310 extension 2. Though one of the best ways to contact them is to fill out their online request form, which is available as the link provided on this slide. As a note, GIC directly bills premium costs to you until your second direct deposited pension payment. At that time, the premium will be automatically deducted. Now, regardless of the designated retirement option you chose, a surviving spouse can continue health insurance at a 10% rate provided they do not remarry, with the following exceptions. Per GIC regulations, 2 surviving spouses who are eligible for coverage as employees are not eligible for survivor coverage unless they terminate employment. Enrollees who are eligible for coverage as retirees are not eligible for survivor coverage. If you have any questions about GIC in retirement or as an active member, you need to contact them directly. Social Security is a federal benefit, and we have Quintia Torres with us here today. She'll be speaking on that during her portion of the presentation. But just as a quick note, Social Security benefits do not impact your state retirement benefits. However, your Social Security benefits might be offset due to 2 federal laws, the windfall elimination provision or government pension offset. And Quintia will speak on those a bit more later. For vacation and sick pay, they are handled by the department or agency from where the member is retiring. The State Retirement Board does not see any of the money from your vacation or your sick pay. Deferral is available into the SMART Plan. We're going to be joined by Marianne Cole with the SMART Plan. He'll be presenting a little later on the SMART Plan and its benefits. If you need to reach out to any members here at the Retirement Board, you can do so by contacting us at either our main email, our communications email, or any of the emails that you see provided here if you have any specific question. Our main email is srb@tre.state.ma.us. Our communications email, if you need to reach out to Paula or myself, is msrb.communications@tre.state.ma.us. Be sure to visit our website and social media. Our website has all of the forms discussed today, additional information, and our upcoming seminar webinar schedule. Our Twitter is home to all the latest stories and news, and you can tweet at us if you have any general questions. Our Facebook is home to our live show, Coffee or Tea with MSRB, Wednesdays at 10 a.m. We will be moving to a bi-weekly format in the next month, but it is a half-hour or so live show hosted by Paula or myself, where we go over some updates and talk about other items related to the Retirement Board. And our YouTube channel is home to some instructional videos, archived webinars, and our Coffee or Tea archive. Our telephone number is 617-367-7770, and we have open telephone hours from 8 a.m. to 5 p.m. If you call outside of those hours, you'll be prompted to select one of the following options. So just choose the option appropriate to your question, and someone will get back in touch with you as soon as possible. If you need to send us anything in the mail, you can send it either to our main office in Boston or our regional office in Springfield. We also have a toll-free number within Massachusetts only, 800-392-6014.